This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Thanks for tuning in. Now, before we get started, I want to say thanks for being here and thank you for listening. Our listener numbers are really starting to take off and I want to make sure we continue that momentum. Podcasting game, it's all about subscribers and audience growth. I've got a really good lineup of fantastic weekly guests coming up over the next 6 weeks or so, perhaps even a competition. We'll talk more about that soon. But for now, can you please hit the subscribe button? If you're an Apple user, grab your iPhone, open up your podcast app. It's the purple one with the mic. Search Crypto Conversation, press subscribe. And while you're there, please give us a 5-star rating. It all helps. If you're using Spotify or another different podcast app, same goes, folks. Please make sure you subscribe so you know when each new weekly episode drops. All right. Hey, so my guest today is Jack Tatar. Jack is the managing partner of Doyle Capital. Jack is the chair of the Cryptoasset Working Group for the Wall Street Blockchain Alliance. And Jack is the co-author, along with Chris Berniske, of Cryptoassets, the Innovative Investor's Guide to Bitcoin and Beyond. And this is probably one of the more important books published on crypto assets in recent years. It was one of the first books to make a serious attempt to evaluate the new world of crypto assets as a new asset class and present a framework for token valuations, token velocity, and so on. So Jack has a really long background as a financial journalist. He's published a number of books on how to invest for retirement. He's an investor, he's an advisor, and he was one of the first people to write about Bitcoin. Let's get into it. And Jack Tatar, welcome to the Crypto Conversation.
Oh, thanks for having me. I really appreciate it.
Excellent. Hey, Jack, I want to start off with a tweet that I saw you tweeted this week. I think the tweet said something like, "Nothing shows your old age more than seeing bonds and gold in your investment portfolio. Bitcoin is the fountain of youth." Now, I think in that one tweet, Jack, you've pretty much described the value proposition for Bitcoin, the demographic shifts that are working against gold and for digital gold, and you've hinted at one of your core messages, which we'll talk about soon. But first off, why is Bitcoin the fountain of youth?
Bitcoin is a fountain of youth because for guys my age and people who have been investing for a long time, if they put a little Bitcoin and they discover Bitcoin for themselves or put a little bit of it in their portfolio, their eyes open wider, their wallets open wider when they see the returns that they get, and all of a sudden they realize that once again they have an open mind and an open view to the possibilities that exist with a new asset class.
Oh, look, you're exactly right, Jack. And I think, you're one of the, I think you were one of the first serious financial journalists to really start writing about Bitcoin. And between 2013 and 2016, you published a series of articles for MarketWatch in which you basically hammered home one simple message, and that message was perhaps take a risk with just a nice, small, sensible portion of your investment portfolio and consider making an allocation to Bitcoin. And look, I think hindsight bias, but that turned out to be quite insightful, and I hope you took your own advice there, Jack.
I did. And you know what's funny, Andy, is I took my own advice, but I also kept advice that I had gotten and had been giving as a financial advisor, which was to go back and to rebalance my portfolio. And my thinking around that has evolved, actually, because when I began to write about the experience of putting Bitcoin into my investment portfolio, I was doing it from the view of being someone who had written about retirement. I've written a number of books about retirement, including financial planning for retirement. I was also running a market research firm, and we were working with a lot of financial service companies to really keep them abreast of what is out there 2, 3, 4, 5 years out there. And that's how we got involved in taking a look at Bitcoin. When I started to see what Bitcoin was all about, and I recognized that you could buy Bitcoin through Coinbase, through some other means, my thinking was, well, if I can take my fiat money and buy Bitcoin, it's an investment. And so I started to look at that as, okay, if it's an investment, what are all those other aspects that we utilize financial planning for? Asset allocation, fundamental analysis, technical analysis, all those things. And let's take a look at how we can work this into our portfolio. I felt, because of its lack of correlation with the traditional equity and bond markets, that this would fit as an alternative asset. And I did a lot of work within those articles about proving that this fit as an alternative asset. I also felt that if I was going to write about this, that it was important for me to do it personally. So being as someone who was writing about retirement, I decided to find an investment that I could put into my retirement account. And I found that with the Bitcoin Investment Trust through Grayscale, which has since become GBTC, which trades on many exchanges. It's not a pure ETF, but it does trade, and many people know about it. It holds strictly Bitcoin. But at the time, the only way you could put this into your retirement account was if you were an accredited investor. Anyway, I went through the whole process. I put the money into my portfolio. I put it into an allocation that was a 10% allocation for my overall investment portfolio. And what was interesting is I wrote a series of articles about this. And 6 months after making this investment, my entire investment in Bitcoin went down 50%. And what was very interesting is the article that I wrote about that on MarketWatch. MarketWatch claimed that they had never seen an author get called a moron or an idiot more than I had in the comment section of that article after the dropped down 50%.
I can imagine.
Yes. I've kept that article. But then subsequently after that, it became the best investment in my portfolio. And as you say, I did follow my own advice. I did do that. But what was interesting also is I kept taking a look at my portfolio and I kept saying, well, now, because of Bitcoin's growth, it was now up to a larger percentage in my portfolio. So was it important for me to rebalance? And at the time, I did rebalance. And I've done some research and some look at rebalancing, and my thoughts on rebalancing have evolved with things like Bitcoin. I mean, should you do an initial investment of 10% into Bitcoin and then maintain a 10% balance in your portfolio, as much modern portfolio theory and asset allocation models would say. And we're doing some work around that. And like I say, some of my thoughts around that have evolved. But I think the important thing here is Andy, that I did this from the perspective of not being a gambler. I did this from the perspective of taking time-proven tools and research analysis, such as modern portfolio theory, asset allocation, financial analysis, and really put Bitcoin under the microscope to see if it fit as an investment. And that's been the majority of how I've been writing about this asset, following this asset since the time that I wrote the book, the first book on Bitcoin back in 2013.
Yes, Jack, you're exactly right. And I'm pleased you brought up modern portfolio theory, because I was going to ask you about that. But I think you've kind of explained the general idea there, which is if you allocate, say, 5% or up to 10% of your investment portfolio towards high risk, high return assets such as Bitcoin, then that can provide a really good upwind to your entire portfolio.
Correct. When I was writing the book, I had obviously, since I've been, looking into the space for a number of years, I idolized many of the greats, such as Harry Markowitz, who was the creator of modern portfolio theory. And I actually had the ability to go out and meet with Harry, who teaches out in San Diego. And I spent some time with him discussing Bitcoin and how it fit into modern portfolio theory. And it was a phenomenal experience for me. If you ever get the experience of being able to talk to a Nobel Prize winner and actually teach them something, I would recommend that you take advantage of that. But what was interesting from Harry's perspective is that he felt he was a believer, obviously, in modern portfolio theory, but we also talked a lot about the Sharpe Ratio, which talks about the fact that, look, there's risk and reward, and you are taking on a lot of risk with Bitcoin, which is why you put it in a small portion of your portfolio. But when you take a look at the Sharpe Ratio, what's interesting is the person who created the Sharpe Ratio actually got his Nobel Prize at the same time that Harry got it as well. So we ended up talking a lot about the Sharpe Ratio as well. But the Sharpe Ratio measures how well you'll get paid, how well you'll be rewarded for the risk that you take. And when I started to look at Bitcoin under that microscope, it's really phenomenal to see the improvements in the Sharpe Ratio compared to other assets. And it's very interesting, as you know, now we have so many people looking at Bitcoin, so many people writing about Bitcoin, and it's very interesting to see so much being written and analyzed about Bitcoin from the perspective of not only modern portfolio theory, but the Sharpe Ratio as well. So I'm glad that has entered the whole conversation that we're having about this. And I think you're going to start to see more and more financial service firms start to take a look at this and start to bring this on board. And it will find a place, I believe, as an alternative asset into investors' portfolios.
Fantastic, Jack. I agree. And Willy Woo has a great chart on this, doesn't he? And I think you've referenced that chart before yourself. But that chart really shows the Bitcoin Sharpe Ratio is way above any other asset class, whether it's stocks, gold, bonds, real estate. The Bitcoin Sharpe Ratio has been above all those other asset classes, as I say, for pretty much Bitcoin's entire 10-year existence, which just shows you how powerful Bitcoin has been as an alternative and increasingly mainstream asset. Let's just finish off on Bitcoin. I do want to talk briefly about the 2020 halvening event, and I suppose maybe just what you expect to see from Bitcoin between now and the end of 2020.
Okay, great. Well, both of those topics, I think, are very, very important topics, and they're topics that I've written about extensively through my Forbes newsletter. But let's go back to the halvening, because I think the halvening is a very, very unique experience. And when I was a financial advisor, we used to have to say that, you know, past performance is no guarantee of the future. And even though we don't have a lot of history with Bitcoin, we do have 10 years worth of data, which makes it an easier asset than some other crypto assets to evaluate and draw some conclusions on. One of the things that we can look back on is the experience of the halvening. Now, I know that your audience is very much in tune with what's meant by the halvening. The supply to miners of Bitcoin decreases every 4 years. And we have that coming up now in May of 2020. What we took a look at from the rich history and price performance that we have of Bitcoin over the last 10 years was what's happened the last two times, because right now this will be the third halvening. What has happened the last two times that we've had a halvening experience with Bitcoin? And what we found is pretty remarkable. Both halvenings that have occurred, a similar experience happened, which is that 1 year before the halvening, so let's say, you know, May of 2020 is when the halvening is going to happen. So May of 2019 is what we had taken a look at, because if you take a look at the 1 year before the halvening happened the last two times, Bitcoin hit a bottom in price and rose, and then the halvening happened, and then 1 year after the halvening, Bitcoin hit an all-time high. That happened during the first halvening, and it also happened in the second halvening. Almost to the day, the exact same thing has happened. Bottoming in price a year before the halvening occurs, and then 1 year after the halvening, we find a new all-time high. So, back in March, I wrote a pretty detailed report taking a look at this. And look, this was not something that was discovered by me. There were a lot of people out there writing about it. I think Willie had written about it. A lot of people who look at this on a regular basis had also recognized it. But I went to my subscribers and said, look, it's March. We will be at a point of May will be 1 year before the halving. There's every indication that we are starting to reach a bottoming in price here. And if you remember the beginning of this year, it was the crypto winter. Okay, Bitcoin was sitting around 3,000. Nobody knew what was going on. Where we had taken a big hit, and there wasn't a lot of interest in it. We came out and said, "Look, we have a bullish view on this, and here it is because of the halving." Now, since that time, Bitcoin has run up. But if this hypothesis is correct, then we should basically see the halving occur in May of 2020, and then 1 year from then, we should reach an all-time high. Once again, past performance is no guarantee of the future, but we've been telling people that, look, if you're not in Bitcoin yet, you've got to get yourselves in and take a look at it, and you have a very good potential for taking a look at running that price up in 2021. And additionally, I know you asked to 20,000, and which is interesting because in all the years that I've been talking about this, I've only made two predictions about Bitcoin. One was that I do believe we will see a Bitcoin ETF this year. And I'll be proven right or wrong by it, I think, within 2019. I do think we'll see a Bitcoin ETF. And the other one was a prediction I made many years ago at a conference on a cruise. I think it was in 2015, where I felt that we would only hit 20,000 in 2020. And it was interesting because obviously we came very close, but we didn't hit it. But I do think in 2020 we're going to see a 20,000 price on Bitcoin, and potentially I do think that we could see that by year end based on some of the technicals that we see at play out there, as well as some of the fundamentals and some of the macroeconomic factors around Bitcoin as well.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
Well, Jack, 20K in 2020 is certainly a catchy little prediction. So, look, let's just see how that plays out. But I completely agree that there's just so much strong fundamentals for Bitcoin going forward at this stage, and I think the market, to some extent, certainly has already begun to price that in, and we can see that most clearly in the Bitcoin dominance metric, or Bitcoin's share of the entire crypto market capitalization. So the Bitcoin dominance metric is now up to pretty much bang on 70%, and that is as high as it's been for 20 months, really. So, as you say, in 2019, as you pointed out, Bitcoin investors, they've already done pretty well. Bitcoin has effectively done a 3x. On the other hand, anyone who's been heavily exposed to altcoins, Jack, well, they have not done so well. So while it's a good time to be a Bitcoin maximalist, it hasn't been a good time in 2019 to be diversified across a whole lot of altcoins. What's your view on the long-suffering altcoin market? Can they come back, or is this Bitcoin's story going forward?
Well, I'm not a Bitcoin maximalist. I never have been. I do believe that we have some pretty amazing projects out there in progress. I think that what we've seen with Ethereum and what Ethereum has done and what's being built on Ethereum, there are some amazing projects that are going to change the way that we do the way that we do things going forward. There also are some improvements on Bitcoin from different products, whether it's privacy coins like Zcash out there, some projects that take a look at governance like Decred. There's some amazing projects that are out there. But I also came to this, and obviously our book is Cryptoassets. We didn't want to look at Bitcoin because we felt that what was being created out there was a rich, almost like the new internet with the new companies that are out there. I do believe when we got to the point of having 2,000 crypto assets out there, the reality was so many of them are garbage. I mean, I've been saying that over and over, that we need to see a lot of these probably go away. And unfortunately, they probably will go down to zero, or they will be merged. It'll be interesting to see what happens to a lot of these projects. But we've already seen a lot of scams out there, a lot of bad projects out there. Now, that being said, I still am a believer that you can put together a portfolio in much the same way as you do your own portfolio diversification in equities, where you buy in equities, maybe you go into the retail sector, and then maybe you have something in consumer goods or something in technology. That those similar sectors exist in the crypto asset space. It may not be a one-for-one, but we're seeing so many different projects occurring in the crypto asset space that I believe that there is going to be a way to create sectorization of these assets that will allow you to put together a portfolio that can be managed according to what's going on in the with the public. Are we seeing more people going over to privacy coins? Are privacy coins being used as a hedge for something? So does that mean that we need to move some assets over to a Zcash from a Bitcoin? We're always taking a look at the correlation between these other alts and Bitcoin, because there are some that the great majority of them move along with Bitcoin, but fundamentally, because of how these assets are structured, they should move in a reverse correlation to them. I mean, there should be points in time where maybe Ethereum moves, or let's say a Litecoin moves similar to Bitcoin, but maybe Ethereum moves differently to Bitcoin. Well, when we take a look at that, does it mean that we could put together a portfolio that not only is going to provide us higher returns, but provide us that diversification that, you know, Harry Markowitz talked about with modern portfolio theory? Can we put together a portfolio of crypto assets that can be properly diversified? I believe it's worth taking a look at that. Now, I will also say that there are going to be times when people are going to say, look, I'm just going to put my money in Bitcoin and that's it. And that will work for people.
That's right, Jack. And I think this is a good jump in to just briefly touch on the book that you and Chris Boneski published. It's called Cryptoassets, The Innovative Investor's Guide to Bitcoin and Beyond. And when this came out, Jack, this was really one of the first serious books on crypto assets to really make a serious attempt to evaluate this new world of crypto assets as a new asset class and present a proper framework for how to invest in these projects and how to try and value these projects. So you'll be pleased to know that I own a copy of the book, Jack, and I've enjoyed reading through it again before talking to you this week. And I suppose the overarching thesis of the book is that, you know, blockchain is a new meta application that leverages the infrastructure of the internet and represents a new technology stack that enables everything from decentralized global currencies to markets and information networks, and really the building out of Web 3.0, which is, I think, what you're getting at when you say, really the point is we're just still so early that we don't really know where the space could go or which new project could come up and leap ahead. And really, that's why it's still so exciting, isn't it?
Yes, absolutely. Absolutely. I mean, so much has been made and so much has been written about blockchain that I do think we're starting to see the impact of the blockchain technology on so many things. But one of the things that I do want to, you know, go back to the book, and Andy, I appreciate you bringing up the book, because it seems like it was written so long ago, and yet it was 2018 that we did it. And when Chris and I were writing it, we were struggling with the fact that we had to kind of put a line in the sand with at what price do we talk about Bitcoin, and at the end of 2017 it was at 1,000. So we kind of, you know, we used that number there, and obviously we know what went on in 2018. But one of the things that I think is important for people to understand about the book and why we created the book was not only the background of myself and Chris, and remember, Chris came to the book as an analyst with an investment firm, with ARK Invest. So he was very familiar at evaluating financial investments and taking a look at this. And obviously, I mean, Chris is a brilliant guy who knows how to take a look at the technology that underlies crypto. But one of the things that Chris and I wanted to do with the book is obviously, talk about, crypto assets, talk about blockchain and the impact that those two things are going to have going forward, but also the feeling that from an investment standpoint, this is going to evolve the investor, that the investor is going to evolve. So the fact that we called it the Innovative Investor's Guide to Bitcoin and Beyond was very specific for us. Both he and I were enamored with the book, The Intelligent Investor from Benjamin Graham, which is a book that has lasted through decades and has guided so many investors. When you go back and you take a look at the book and you understand what we were doing with the book, which was not only about writing the history of crypto assets, which I must say was one of the most interesting aspects of writing the book, but it was also to try and get an understanding of investment into those people who, for them, this may be the first time that they're investing or the first time that they're looking at Bitcoin as an investment. And we believe, and I think we're starting to see it, that the investor of the future is going to evolve. They're no longer going to be the person that is tied into what CNBC is saying about quarterly numbers or about interest rates and the Fed and the Fed's impact on this. But it's all of these other aspects that are going to happen that we're starting to see with crypto assets and blockchain technology that are going to change the way an investor views the market. I think it's absolutely amazing that we have transitioned to a world where we have the President of the United States now saying we need to get down to a zero interest rate environment, which is what he said today. I mean, it shows that the whole investment scheme is evolving and changing. And I believe that investors need to change and evolve as well with this and start looking at different types of investments and to grow beyond what we've looked at with the 60-40 asset allocation and look at beyond just let's invest in ETFs or let's invest in mutual funds or let me just invest in what my advisor tells me. There are so many other things out there. And what we wanted to do with the book was to really pull the curtain aside and say to investors, here's the new world. Here's the brave new world. Step into it in a manner that's structured, prudent, but recognize that there are options and opportunities here. And we want the investor to evolve from that investor who was raised and born on Warren Buffett or Peter Lynch or buying mutual funds to now go beyond that and go from the intelligent investor to what we feel is the innovative investor. And I think that is something that is playing out here. And I think you're ultimately going to see the financial services industry evolve, much as it has evolved already, to where people do self-directed investing. People are investing in Bitcoin in many different ways, but the whole investment spectrum is changing. And that was very intentional for us when we subtitled the book, The Innovative Investor's Guide.
Yes, I like that description. Innovative investment is a great term, a great title, and it's also a great way to approach the space. And I suppose if you're building a mental framework as an innovative investor, you really need to be constantly evolving your thinking, Jack. And there's an author note at the start of the book where you and Chris reflect on the difficulties in attempting to write about this new asset class that is literally, evolving in front of your eyes as you're trying to document it, I suppose. And you reference at the time Bitcoin being at $700 US and ETH being at $7 US as you started writing the book, which was in 2016. And that sure seems a long time ago. And even in the process of publishing that book, I'm sure you'll agree there are parts of the book that have simply, been they've been disrupted or outdated or moved on from. And I suppose I'm talking about, the chapter on ICOs. It gives you an idea of how fast the space is moving, and that before, as you wrote the book, the ICO bubble kind of came up, and we've moved on from that already.
Yes, yeah, and it's a great point, Andy, and thanks for bringing that up, because one of the funny asides to the book was we had to deliver the book as you have to with any book. You have to deliver it to the publisher just about 6 months before it gets published. So obviously, with a space evolving like this, we were very, very nervous, and we had our hands in this book almost right up until the end. And one of the interesting points in there was we had a whole section about the ETF. And if an ETF was going to be approved, the impact it would have on the market. And our book was coming out, in an March, April, May timeframe. And we were holding them back because we wanted to find out what went on with the Winklevoss SEC approval of ETFs. And that happened in March, and it was probably the last thing we wrote in the book. And Chris and I were laughing. We were like, look, so many things are going to change in this book going forward. But our intent was to make this as evergreen as possible so that it stands on its own. And it's been interesting because people have come back to us and said, when are you going to update the book? When are you going to, write an updated version? And we have, our belief is that the book, so much in the book is evergreen, meaning that you can read this in the context of any market and still learn similar things that we intended you to learn about modern portfolio theory, looking at investments, and all of those types of things. So, and additionally, we wanted to stand as an artifact of the time as well. And that's one reason why we had so many comments in the very beginning from so many people in the industry. We wanted to capture the names and the thoughts of people in the industry. So we have a few pages of people who we had given copies of the book to write comments. And we love that part of it. We love that that's in there. When you take a look now at some of the things that, like you said, where things have evolved, certainly the ICO area, and this was a space where Chris and I discussed that extensively because there were some companies that we really believed in, and we were like, we need to write about these companies, but we were always apprehensive of where would they be when the book came out, or where would they be 6 months from when the book came out. So I agree with you. I think that within the ICO section there are some points that could be updated, but one thing I will draw your attention back to is we spent a number of chapters talking about scams and investment philosophies over the years. We talk about tulip mania. We talk about different scam artists. We talk about pump and dump and cornering the market, because we wanted to put that in the context that as crypto assets grow and mature, you're going to see similar things that happen in the equity market, such as cornering and pumping and dumping, happen in the crypto market as well. And we wanted investors to be aware that what has happened in the equity markets could happen in the crypto markets as well. So when I go back and I look at those chapters, I'm glad that we included them, because I think that they provide lessons and education for the new innovative investor that draw on experiences from what an investor in many other types of assets have followed as well. The other aspect in the book, which we really wanted to lay down a foundation for discussion, was around valuation. Now, at the time of the book, and I still contend, Chris is one of the leaders in recognizing the valuation of crypto assets. But at the time, Chris was really on at the top of the game in terms of valuation of these crypto assets. And we put a lot of information out there about how we were viewing valuation, how to value these crypto assets. It's heartening to see how that whole space has evolved, that we've got people on Twitter doing some amazing things in terms of valuation. There are new valuation models out there around crypto assets and around Bitcoin that we had never thought about. So, our intent wasn't for the book to be a be-all, end-all, but in like an area like valuation, we wanted to put enough out there to create a foundation for discussion, and to see where it's gone at this point is like I say, it's very heartening.
Looking for near real-time crypto asset spot rates for everything from Tron to Monero or Doge to BNB? Brave New Coin's GWA and MWA crypto APIs calculate a fair price for over 1,500 assets and 6,000 pairs across the global network of crypto exchanges. At 30-second tick intervals and available via streaming or REST API, Brave New Coin's GWA and MWA APIs deliver independent third-party price discovery you can rely on.
Yes. Look, I really enjoyed the book, Jack, and I think there's a wealth of information in there. And as an innovative investor, if you are going to invest in the crypto asset class, it's really the individual's responsibility to ensure that they stay abreast of developments and educate themselves so that they can do, the relevant due diligence, but also know how to protect themselves from the scammers and the things that can go wrong. Because unfortunately, crypto is full of scammers, and those scammers, some of them are quite smart, aren't they? Unfortunately, just new technology areas attract new technology-based scams, and that's just the nature of the industry. But so, look, protect yourself. Hey, Jack, I just want to talk briefly about your Forbes a newsletter that you do, and we'll put a link to that in the show notes if anyone's interested in having a look and potentially subscribing. But what I found interesting about the newsletter is that in the newsletter you have 2 portfolios that you have created and you track on a month-to-month basis. So one portfolio is called the crypto asset portfolio, and so that has Bitcoin and the various altcoins that you're tracking. And then the other portfolio is called the blockchain equity portfolio, and I like this idea. And so that's for investors who want exposure to companies that are perhaps either working in the blockchain space or, they have some kind of association with another blockchain company. They're more blue chip companies like your IBMs or your Microsofts or your Squares, companies like that. And then you benchmark that portfolio against the Dow Jones Industrial Average, the S&P 500 and the NASDAQ. Can you tell me just a little bit about what the thinking is there? What are you trying to provide for your subscribers? And also, Jack, put you on the spot. Are those portfolios, are they real portfolios? Do you have skin in the game, or are they paper portfolios?
I've been an investor for many years. I have 30 years on Chris, and I've always remembered the whole space of investor newsletters, printed investors newsletters, as something that was the way that people would get up-to-date information about investments. We didn't have Twitter. We didn't have a lot of the internet back in the days when people were investing. So when Forbes came to me with the concept of doing the first major newsletter on crypto assets, I was intrigued by doing it because for a number of reasons. First, because I remember the days of when there were these newsletters out there, and most of these newsletters would have a portfolio in there to basically show that they have skin in the game, whether it's their own money invested or the fact that they're putting their name with a portfolio. That's still skin in the game as well. I think what really intrigued me here and doing this was that as much as I've seen Chris and other people in the space talk to the technology and talk through the development of these projects, my interest has always been, how do I talk to the regular investor who's thinking about investing in Bitcoin and how it can potentially fit for them? So when I made the decision to work with Forbes on this, my feeling was this was a way to speak to the regular investor and to move them, once again, to that point, move them to becoming an innovative investor. How should they look at Bitcoin and crypto assets in their own portfolio? A lot of what we do is from the perspective of how an investor should be looking at these assets. In terms of the portfolios out there, I have a research team that I work with. for those who don't know, I am actually a managing partner for a venture fund, and the venture fund invests in early stage companies. We do invest in crypto assets, and we have worked with a lot of startups in the space as well. And we're starting to do more in terms of managing other people's money in this space. But to your question about the portfolios. The portfolios that we have, the core crypto asset portfolio, it does not exactly mirror my own portfolio, but it does mirror a lot of the trading view that I have at this point in time. And that's only because from a personal perspective, I may be involved in more assets because my risk tolerance may be different. But when I look at putting together a portfolio that can be timely and geared towards the typical investor, that's what we're doing with the core crypto asset portfolio. And additionally, I manage that portfolio in the newsletter for more of the longer term investor. You can manage cryptos on a short term perspective and be in there trading every day. That is very difficult to do when you're doing a newsletter. So what we do is we take a look at taking a mid to long-term view with the crypto asset portfolio, which at this point is very heavily weighted into Bitcoin, but we do have some other cryptos out there that we feel are worth taking a look at. But we don't put cryptos in there just for the sake of having diversification. We want to put cryptos in there where we think the potential is for these assets to do well as an investment and as a successful project. The blockchain equity portfolio is an interesting portfolio, and it was initially something that I wasn't sure was going to work, and I'm still evolving my thinking there. But these are investments where we don't mirror the portfolio on our own, but they are holdings, many of which we have in our own investment portfolios. But what I've tried to do with the blockchain equity portfolio is, rather than taking a look at what some other ETFs who claim to be blockchain based, they just put themselves into companies that are doing anything related to blockchain. So you'll see banks in there, you'll see credit card companies and all of those types of things. To me, that doesn't fit into what I view as a blockchain equity portfolio. I want to see companies where the blockchain and crypto is going to make a major, major impact on their bottom line and is going to influence their price performance in both the near and long term. For instance, one of the largest holdings we have is Square. Square has underperformed, but Square, because of its reach into small businesses, because of the fact that it accepts Bitcoin, because of a number of things that Jack Dorsey has said about it, is becoming more and more correlated to the price of Bitcoin. And I think the success of Bitcoin and the success and the use of blockchain technology will have a significant impact on Square. So for me, that fits into the portfolio rather than putting an investment in there that may have one small blockchain project, but it's not going to impact the performance of the stock going forward. So it's kind of a tough thing to do. We're taking a look at how it evolves. We have a hand. I think our portfolio is 10 or less stocks in there, but each of those stocks has a blockchain story. And I do credit the Forbes team, Michael Del Castillo, who's a great writer there. They follow a lot of the blockchain companies, and we do share a lot of information. But these are companies in that portfolio that I think are going to see some significant impact from their efforts around blockchain and crypto assets. So we're not putting something together that has some small exposure to blockchain, but something that has some real, we feel, a direct relation and a direct impact from what they're doing in that space.
Got it. All right. Hey, Jack, thanks for talking to me today. Let's wrap it up. Let's just quickly finish on some rapid fire questions. I want your hot takes, your hot fire. Take your best shot. Here we go. Jack, where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I would say that I'm probably very much in the middle, probably leaning a little bit more towards the Bitcoin maximalist at this point in time.
Sounds good to me. Hey, Jack, what would you say is your firmest conviction crypto opinion?
Bitcoin will prove itself out to be an asset that will be in many people's portfolios and will help them achieve financial returns above and beyond what they'd like to see and help them achieve their financial dreams.
Could not agree more. I like that one. Hey, Jack, Facebook's Libra coin. We haven't talked about Libra today. Just give me your hot take. Good or bad for the crypto ecosystem?
I'm leaning towards I don't want to say bad. I'm leaning towards it being not as connected to the crypto space. Look, let's remember something. Facebook is a public company. Its goal and objective is for its investors. Bitcoin and crypto assets is not about the investors. It's about changing things in society. So there are a bit of apples and oranges there between Libra and between what other cryptos are doing. And I'm not even sure it's ever going to see the light of day.
I completely agree. Not in its current form. Hey, Jack, I got to ask you, you're a New Yorker, you're an American. Putting you on the spot, who wins the American presidential election 2020?
See, it's easy to ask that from being way over in New Zealand.
Oh yeah.
I've learned not to get too political beyond my group of friends, but the one thing I will say is America is a very, very large country, and there is a diverse group of people in this country, and they all vote. I hope that whoever wins recognizes the fact that we've got a major disruption going on in the financial industry and the financial markets and the financial underlying economy here, and recognizes that Bitcoin can help to bridge that gap. That's all I'll say there. I have my own hope in who will be elected, but I'm not going to go there. I don't think that was what the question was, right?
Nice one, Jack. Let's get existential. Let's zoom out. What is the long-term future for the human race? Do you see dystopia or utopia?
Well, I've always thought I was an optimist, and I do try and be as optimistic as possible. I do, however, see too many indications out there of the status quo protecting their turf and protecting what they have, that I do think we're in for some pain over I don't want to say I think long term I'm optimistic, but I think in a near to somewhat long term, I think we're going to see some pain, and we're going to see some real stupid things.
Yep, short-term pain, long-term gain. Let's see what happens. Hey, finally, Jack, what is your favorite science fiction book, film, or show?
That is an awesome question. And the reason I say that is because I just began a class today at Princeton on science fiction at the university. I take one class a semester at Princeton University, and I'm doing a class on science fiction. My favorite science fiction book, without a doubt, is The Sirens of Titan by Kurt Vonnegut. Now, that being said, I do collect and I do love books by Jack Vance and Robert Sheckley, but I also think that we are seeing some amazing authors of all diverse groups now writing science fiction and what I'll call speculative fiction. I think we are encountering a time with science fiction, since you brought it up, with science fiction, where we may actually get the best discourse between society, humanity, storytelling will come out of the science fiction and the speculative fiction that we're going to be seeing coming out in the near future. But I do love, I do love The Hitchhiker's Guide. I do love anything by Jack Vance. I do love Fahrenheit 451, and I love Kurt Vonnegut, and I just always fall back to Sirens of Titan, which is probably not a hardcore science fiction book, but is still something I love, in addition to books like Snow Crash, and which are interesting to go back to now and take a look at really the indications that they had around the creation of cryptocurrencies and different monetary systems, which is something Stevenson has explored in not only that book, but some of his other books as well.
I could not agree more, Jack. You've dropped some classics of the genre in there. I might even throw a couple of links to some of those classics in the show notes, so the listeners can follow up. Because science fiction is just that's where humanity practices building the futures that the various different futures that are available to us, in my view. But hey, I think that's a good place to finish off. Jack, why don't you tell the listeners where they can find you on your various platforms, what you've got going on. The microphone is yours. Take it out.
All right, great. Thank you so much. Well, I guess for those of you who have any interest in what I have to say, I direct you over to the Forbes Cryptoasset and Blockchain Advisor newsletter, which is something I do in conjunction with my research team. We prepare that on a monthly basis. You can see information on that on my Twitter feed, which is at Jack Tatar, Tatar. I don't tweet as much as many people would like me to tweet, but we do provide a lot of information through the newsletter, as well as for those investors who are involved with my investment fund. If you'd like any information on what we're doing in terms of investments and companies and some of the venture funds and investment funds that we're working with, you can email me at jack@doylecap, DOYLECAP.com, and I'll do my best to get back to you.
Nice. Hey, thank you, Jack.
Thank you, Andy. It was always a pleasure. Thank you so much for your time.
All right. Thank you for listening. Thank you to Jack. Hey, I'll put the links to Jack's Forbes newsletter in the show notes. I'm also going to put in a link to a book that Jack wrote in early 2014 called What's the Deal with Bitcoins? Didn't quite get time to talk about it, but the PDF is freely available online, just in case you're interested. That's in the show notes. Like I said at the top of the show, our listener numbers are really starting to take off, which is really exciting. I want to continue that momentum. Like I said, podcasting game, it's all about subscribers and growing your audience over time. So really appreciate you listening. So many cool, amazing guests coming up over the next 6 weeks. I'm recording the next week's episode tomorrow, actually, and that is a really big one. So don't want you to miss out. To make sure that you don't, please do hit the subscribe button. If you're on Apple, grab your iPhone or go on iTunes, open up the app and search Crypto Conversation, press subscribe. Also, as I said, would love it if you could give us a 5-star rating. It all helps. Same goes if you're on a different app, just hit that subscribe button so you know when each new weekly episode drops. All right, that's it. This was the Crypto Conversation for Brave New Coin.